Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. And we are on Periscope at pscp.tv/Dallas Trading Floor. We're also on YouTube at youtube.com/Dallas Trading Floor. We're on Facebook Live. We're also on Twitch at twitch.tv/Dallas Trading Floor. And of course, we're on TikTok. So it is another day, kind of down day on Wall Street. Looks like things are moving, kind of moved a little bit lower. For everyone on TikTok, if you want to take a look at the slides, I'm simulcasting them on Periscope at pscp.tv/Dallas Trading Floor. And just let's get into it on the slides. So basically, here we are. The market direction right now is down. It's about 1.55% or $155.40 when this slide was taken. The S&P 500 is off, and the Dow Jones is off, and also the NASDAQ. But the NASDAQ is very close to its all-time high, around 10,000 on that on that chart. So as you can see, and let's blow that up so everyone can see it. The next important slide is the SPDR. This is the largest ETF in the world. It's worth about $220 billion. A lot of retirement funds that are parked in this one. This covers the S&P 500, basically the 500 largest companies that trade on the stock exchange. So it's a very good indicator of what's happening. Now, one thing is a little bit troubling here. The volume was up. It's up about 12%. And the price was down 5.16. So it seems to be settling on this moving average here. This is the 50-day moving average, as you can see by the pointer. So hopefully I can show you that. Yep, there we go. Let's put the pointer up just so that you can see that. There we go. That pointer up. Okay, there we go. This is the 50-day moving average, this red line here. Very important. It looks as if, hopefully we're going to see some support at this line. If it moves through this line down to the downward, we may be retesting. But right now, we're long in the market, and that is because we are in a confirmed uptrend currently. We're still in the confirmed uptrend. This is the diamond. This covers the Dow Jones. Now, the Dow Jones is only 30 stocks. It's the Dow Jones index, which is what's quoted by almost all the news media. It was a index from 1920, and it really doesn't cover that many stocks. So it's not nearly as important. But as you can see, it's also moving kind of in sympathy with the SPDR. It's moving down to this 50-day moving average. Now, the question is, are we going to see a bounce at this line? Well, we're going to see on Monday. If there's a bounce or if it moves through this. If it moves through the line, then I think we may be moving finally to retest some lows. So we may have to close up some positions just depending on how it looks. But if we test some new lows, then we may move from a confirmed uptrend into a downtrend. But we're definitely not there. So it's definitely not time to be short in the market at the moment, because we haven't really retested. We haven't seen if we're going to retest the lows. We probably are, but right now it's not necessarily good time to be short. As promised, I want to show you some stocks that have done particularly well during this stay-at-home period. And I have the stay-at-home stocks. These are stocks that, even though they're all down today, with the exception of Ringcentral, which is up, these all have done well. So you might want to consider watch listing some of these stocks. And by the way, this list, for everybody that's watching on TikTok, this list is on YouTube, on the feed that I have on YouTube right now. It's youtube.com/Dallas Trading Floor. And it'll also be available after the show is finished on youtube.com/Dallas Trading Floor. You'll be able to go over there and take a look at the slide. Basically, at the top of the list, of course, is Zoom, and that is symbol ZM. Twilio is also on the list. TWLO, it's done quite well. CrowdStrike, this is a security company that basically secures the enterprise connections for people that are working at home. And this has become a very big issue. There's two stocks in this kind of area that are doing quite well. One is Fortinet, FTNT is a symbol. The other one is CrowdStrike, CRWD. Now, also, we have Ringcentral, of course, RNG. And one of my all-time favorites, I've traded this one quite a bit, Team, T-A-E-A-M. This is Atlassian, and what this company has is a platform that allows the development of software across the web, across continents. And so, as we know, many software developing is a dispersed thing. It's not in one particular place. They might have programmers in India. They might have programmers here in the U.S., in Australia, and in Europe, and they all can collaborate using their platform. This is Team, T-A-A-M. This is their stock. Very strong fundamentals on this stock, and it's doing quite well. Also, as everyone knows, Amazon is there, A-M-Z-N. I mean, I don't think you can't hardly be anywhere without seeing Amazon. The big disadvantage of Amazon, of course, is the share price at $27.45. Now, there are fractional shares that are available of this through Charles Schwab and some other ones. I recommend Charles Schwab over Robinhood only because they have a better execution track record. There have been some difficulties with Robinhood in terms of their platform being able to execute all the trades timely, and that's very important. So, if you want to just do a pure play on Amazon, they do have stock slices, and they're over at Charles Schwab. So, again, I don't get paid anything from Charles Schwab. I should, but they're over there, and that's a good way to go. Charles Schwab for stock slices of stocks like Amazon that are kind of pricey. All right, so those are the ones that I'd like to take. Now, I want to show you the chart of Ringcentral. The reason I want to show it to you is because it's one of my featured stay-at-home stock. It's up $5.34 when the slide was taken, or about 1.91% at $284.82 per share. As you can see, it's moving very nicely up this 40-day moving average. This is the kind of a chart pattern that you want to kind of look at. It's got a composite rating of 98. That means it's in the top 2% of all stocks, and it seems to be trading very, very well. So it's basically a communications play that kind of integrates text and fax and other services kind of in one. Now, there is competition. One of the things I want to point out, and this is one of the reasons why I hold this stock, Microsoft has Microsoft Teams, and that's doing quite well as a stock, as a stay-at-home stock. Even though it's not actually on the list, it sort of is because everybody's using Microsoft Teams. So it's pretty good. Basically, yeah, it is the same as Mad Money. That's right. And you know why? Because we get them all from the same source. The source is Investor Business Daily, by the way. And this is where, by the way, Jim Cramer takes all of his cues from Investor Business Daily. As a matter of fact, almost everything that he's talking about on the show comes from Investor Business Daily. I highly recommend you taking a look at this. I also highly recommend you learning how to trade their method called the CAN-SLIM method, which I do as well. I'm a student of William O'Neill with the specialist, but that is the list. It appeared in Investor Business Daily. You're absolutely right on that. Now, I have a very interesting trade that you might be interested in, and this is a trade on Vertex Pharmaceuticals. So let me see. I'm going to pop this up here. There we go. What's your take on Facebook gapping down again? Okay, I'll cover that in just a second. Essentially, what's happening is there's a lot of pressure to get Facebook to police the sites and basically to censor people on their platform. And of course, I don't know if that's going to work, but they're putting a heck of a lot of pressure on Facebook because a lot of people are angry that some people are getting messages out and they don't like them, so they want to get rid of free speech. And I understand that. There's just a lot of people that are just easily offended. So, but Facebook is dealing with it, and they're sort of being attacked on all sides, and that's part of the reason. I don't think the stock is fundamentally bad. I think it's going to go higher, and I'm very much of a fan of Facebook. I'm currently not in the issue, but I think that it potentially will go higher. Now, here's one that I wanted to talk to you about. It's Vertex Pharmaceuticals, setting up very nicely. It's got a cup here, as I can show you here. Let's see if I can put the pointer up here again. It's got a cup, and then it's got a handle. So hopefully, once this handle is complete, it will move higher. We'll see. It's always it always is in the, it proofs in the pudding. But this is the cup here, and then there's a handle. So that's a very good chart pattern that you can take. So I created a trade on this, and I actually made this trade. The numbers aren't quite the same because I did, I did on this one. Oh, wait a minute. Let me see if I can view that. There we go. I did create a trade on this one. The numbers aren't quite the same because by the time I got ready to make the trade, the market was moving down for the stock, and so I haven't yet put in the option trade, the option leg, but I will as soon as that recovers, probably on Monday. But I did buy the stock today at 286. I bought the stock at the 286 level. On this example, it's 287.59. So by the time I got around to it, it had already gone down a little bit. It did move a little bit on an uptick. I bought it on an uptick. So we'll see how it's doing. It's moved up a little bit since then. And I don't know exactly how it's gonna move out. Okay, so here's how the trade works. Basically, you purchase 100 shares of Vertex for $287.59 a share. You then set a stop loss, good till cancel, for July 2nd, which is basically next Friday. And the stop loss on this is a 7% down stop loss, or 93% of the amount that you originally bought the shares for, or $267.46. You then sell a call contract, which expires on July 2nd, 2020. And in this example, it's a $290 strike price. And at the time, it was yielding $7.96. It's fluctuated a little bit since then, but it's about that. So if it closes, and basically it gives you three responses. If it closes above 290, which is where the strike price is, then your profit will be about $1,000, a little bit over $1,037. If it closes below, you'll keep the premium, which in this example is $797. Or if it closes below the stop loss, 267.46, you will it will be stopped out of the stock, which will mean that you'll have a little bit lower value on that. But because remember, the value of the option will also expire, that will be a situation where you get to add it back, and you'll limit your losses basically at about $1,217. So if you want to see any more of these kind of trades like this, I do these all the time, and I put them out on my I put them out on my action alerts. I put them out on my action alerts list, and you can sign up for that. Actually, it's totally free, by the way. And here's it on the screen. Now, if you're on TikTok, go to my profile, just hit on that list, put your information in, and you'll get the free trade alert. So if you're on Facebook, YouTube, Periscope, or Twitch, just go to DallasTradingFloor.com and then put in the information, and we'll get it right out to you. It's totally free, and you can unsubscribe anytime you want. So we have unsubscribe. It's the unsubscribe button. It's just totally free. It's basically how I'm trading, and it's just to kind of get an audience out there that wants to potentially make money trading some of these stay-at-home these stocks. Okay, so let me go back here. I want to show you currently what I am in, because I think that's important for full disclosure. You should see kind of what I'm trading currently. And what I'm trading currently is this, and let me show you. I'm in Netflix. It's down a little bit today, as you can see, $13. But I've sold 2 contracts on it, so I'm pretty confident. Tesla, it's also down a little bit as the overall market. I'm in Vive. I'm actually positive in this one. When this slide was taken, it was a little bit negative, but I'm actually positive in Viva Systems. And then also PayPal. It looks like I'm also positive in PayPal. Microsoft's off a little bit, but again, that's one I do have sold a contract. I sold a 207.50 call on Microsoft for expiration on July 2nd. But it looks like I'm probably just going to keep the money on that one. It won't be exercised. And then today I entered Vertex Pharmaceuticals. And when the slide was taken, this is about exactly where I bought it at 286.49. So I just kind of wanted to show you those, those options. So there you go. Okay, so let's see. I'm going to start taking questions. Let's see. Absolutely. Some say Nikola could be the next Tesla. Well, here's the problem with the problem with buying the next anything. To be honest with you, I agree that I think Nikola possibly could be the next Tesla, but why not buy the Tesla? Because you see, here's the thing: Tesla is now the most valuable car company, with the most valuable automotive company in the world. Last month, the valuation of Tesla exceeded the valuation of Toyota Motors. If you want to see the value of that, let me just show you this. It's very interesting. The symbol for Toyota Motors is TM. So I want to show you that chart here. And as you can see it, let's pull down to the valuation here. The valuation is $175 billion. That's the market cap on Toyota. I'll show you that to everybody here at home on the screen. As you can see, it's and I just want to show you that particular number here. It's $175 billion. Okay. Now, the market cap on Tesla, let me show you the market cap on Tesla. And this is why it's so interesting, because the market cap on Tesla, TSLA, let's get that pulled up. All right. The market cap on Tesla, interestingly enough, and I want to show you this right. Yep, there we go. There we go. I'm going to show you that right now. The market cap on Tesla, if you'll notice, is $179 billion. Isn't that interesting? Toyota Motors, $175 billion. Tesla is $179 billion. What does that tell you? Well, that tells me very, very simply that the market is moving away from internal combustion engines. Now, Toyota is very well placed in that business because they have the Prius. They've had that for 10 years. And so they're sort of there, but they're not all the way there. And they're going to get past it. Unfortunately, for them, it's going to be Tesla, I think. I think it's going to be Tesla. So that's an important thing to really, really look at. Now, can Nikola be the next Tesla? Maybe. But here's the thing: I wouldn't bet on it, because I do believe that Nikola will go up. But the competition for building trucks, electric trucks, especially for medium and heavy duty trucks, these are semis, is going to be intense. And there's going to be a lot of people that are going to get into this business. I think International Harvester, Navistar is going to be in this business. I do think that you're also going to see interest from Ford. Well, what I'm trying to say is that all these manufacturers are great, but they have one problem. And that problem is they don't have the capability of delivering the units. And the reason that they don't is because they have to purchase their batteries they don't manufacture their batteries like Tesla does. Now, here's the limiting ability. The ability to make the vehicles is limited by the ability to produce the batteries. And the only company right now in the world that's an automotive company that has the capability in mass is Tesla. So, and by the way, Tesla is considering building another battery plant, probably in the Austin, Texas area, but who knows? And if that's the case, they will have at least 20% cost advantage on all the other companies. So that's the kind of thing you want to be careful with. Now, can you make money in Nikola? Absolutely. It's a trading stock, but it's not a long-term stock. So it violates one of the CAN SLIM principles. And that's the reason why I am not, at least I'm trading Tesla and not Nikola. Just for me, that's how I'm doing it. So let's see. Oh, geez. Well, Genius Brands. Okay, sorry to see that. Here's the problem when you're dealing in thinly traded issues, and this is. Let me just show you some things that you don't want to that you want to be careful about when you're buying when you're buying issues. Now, I know that Genius Brands was really popular, but the top 10 stocks that are being traded on Robinhood, most of them are going to lose money. I'm not trying to be a negative Nelly here, but you need to buy quality. And here's the problem with GNUS, and I just want to point this out. This is why I typically don't buy stocks like this. Now, that's good for me to say, but I've done this many times. You can see this blow off top, but look at this composite rating. It's only 38. And so the chances of this over time doing well, it's not as good. Wait until this thing moves up a little bit. For instance, the stock that I bought today, Vertex, VRTX, it's a pharmaceutical company. Let me show you that one. That was a more expensive stock, but it's got a 99 composite rating. And that makes a lot of difference. It's number one also in its group, and its group, if you can see this, is the number 6th group. So here's the thing. I'm trying to stack the odds in my favor. And the way I stack the odds in my favor is I typically buy very high rated stocks right before they break out in the very best in the very best groups in the very highest parts of the market. I typically don't trade the bottom 2/3 of the stock market. Why? Not because there's not good stocks there, but because I'm more likely to make money on the top third. So I'm always careful to look what the market direction is and what the stocks are that are hitting their new highs. Those are the stocks that I'm typically buying. Why? Because they typically hold up a lot better than other stocks. Just wanted to show you that. Okay, David, you bought some AAL. You know what? I'd be really careful on the AAL. I just think that they're going to have some issues. Again, it's not a very high. American Airlines is not is not a top-rated stock, and I'll show you that because I think that's important to see it. Because especially when we tend to retest, we're moving a little bit down now and we're going to retest. It's in the worst possible category, which is composite rating of 1. Do you see the fact that I'm trying to buy stocks that are in the 95 or better composite rating? This is in the 1. This is if we go into a bit of a downturn and we continue in this downturn, American Airlines in this group is probably going to fare very poorly. Why? Because it's got a composite rating. Now, if you're looking to buy a lottery ticket, this might be a good one because it is a company. It probably won't go out of business. But you have a very, very dangerous chart pattern here that I want to kind of point out to you on American Airlines. And I know it's I don't want to be negative because believe me, I paid my tuition in stocks like this for a long time. But as you can see, we have a relative strength here of 3. What that relative strength means is 97% of all stocks right now are doing better than American Airlines. So, and it's also trending down. So typically, if you follow the trend, this is going to move lower. And that's just the way it typically works. Now, can it move higher? Absolutely. But remember, you want to play the percentages as much as you possibly can. All right, so is it a good time to buy MU? Now, MU is a stock that I have traded. That is Micron Technologies, and I think it is because MU is a little bit different in that we are in a cycle right now where MU might be a very, very good stock. And the reason, let's look at the chart first. Let me pull up the chart here. It is still a little bit. Here's the thing. I wouldn't buy this stock right at the moment. I'd watch list this stock. Why? Because as you can see, the 50-day moving average crossed the 200-day moving average. This is the red line that crosses the black line. That is a signal that it's going to move lower. So it's still in that range. It's moved below the 200-day moving average. I would wait to buy this until you see this 40-day moving average move above the 200-day moving average. It looks like it's going to. It looks like it's potentially buy, but it's probably, I would have to wait on this. This is a watch list stock. I would have to wait until we saw about a 55 on the price. So I wouldn't buy it at the current price it is at. I would wait until we got to a higher price range. So let me look at the chart of the other aspects of Micron Technologies. Here's the thing about Micron, it's a little bit better group. It's got a 56 composite rating. I typically like to buy them with a higher composite rating than this. It's still not ready to buy. It's definitely a watch list stock, but as you can see, there's certain issues on it that I don't particularly like. There were they had a reduced sales last quarter, so it's just not something that I really would want to be in. Also, the industry group rank is 161, and the problem with that, of course, is there's 197 of the industry groups, and this is in the bottom part of that. So I don't typically like to buy in this industry group because it's too low relative to the other ones. So that's kind of my take on that on Micron. But it's still a great company. I have traded it, but I don't think it's right time. All right. So I wonder how to pronounce your name. Okay, thank you. I'm just Jim Malone. That's it. Jim Malone. So pretty easy on that. Tesla also said they're going to run the factory for 24 hours. Yeah, I do believe that. Here's the thing. Here's part of the reason I'm in Tesla, and just for clarification, I want to be totally transparent here as to what stocks that I am currently currently in. So here's a list of the stocks that I am currently currently in, and one of them, of course, is Tesla. I'm in Tesla. I'm in Vive. I'm in Netflix. So just for full disclosure, the reason that I'm so interested in Tesla is because they literally have sold every car that they're going to make. That's a really good situation. Most of the other car companies like Ford and Chrysler and General Motors, they have lots of cars sitting on lots. As a matter of fact, there's Tahoes parked that they can't sell and they won't be able to sell. And so this is a real drag. And typically also another thing that you've got to look at is that in electric vehicles, the profit margin is about 20%. That is not true in in internal combustion engine cars. The profit margin on internal combustion cars typically is less than 3% after you take out everything. So for every dollar more that Tesla is able to book, they are going to see more profit than the other companies. That's the reason why their stock price has moved up so much. Now, it's quite an expensive stock, so you can't necessarily go out and buy 100 shares. The thing to do is to possibly buy a slice of it, and you can get those through Robinhood has them, but I wouldn't recommend the Robinhood one. But Charles Schwab has slices of stocks, and that's a really great way to own the very, very best stocks like Amazon and Tesla. And I do put Tesla in that category, at least for now. Okay, so let's see. Suggest a call on Netflix for next week. Very, very good question. I am currently in Netflix, so I want to be clear on that. I am going to be probably selling a call on Netflix. I haven't yet done it because I'm waiting for my call to expire for today, but I am looking probably to sell a 265 July 2nd call, and I don't quite know what that's going to yield, but I'm going to take a quick look here to see what that would yield. So that is Netflix in FLX Netflix. So I'm going to look to see what that call is going to yield. There we go. All right, taking a second to update, and hopefully I'll be able to show you that just as soon as I get it up. Yeah, there we go. Okay, it is the July. Look at the July expirations. By the way, what I'm doing here, and I'll show you this just in a second, is I'm using this. I'm using the NASDAQ site, and this typically is very good because their feeds are very, 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 very relevant. So I'm looking at the July 2nd. Let's see, the 445 call. That's a little bit low. Yeah, I was probably going to be selling the 465 call for 267. So it doesn't. It shows to me the way I'm reading this chart is that it does look like that. We're going to back off from probably the 260 level. I think we're going to move down a little bit, but the chart pattern is still very, very strong for Netflix. I want to show you the chart pattern right here. And let me put up the chart for Netflix so that everyone can see it. Here we go. There we go. Okay, super. Yeah. So this is the chart of Netflix for everyone that's out there. By the way, if you're looking on TikTok, I'm showing these slides on Periscope at pscp.tv/Dallas Trading Floor. You can see all of them. And if you want to see a recap of the whole show, it's recorded on YouTube at youtube.com/Dallas Trading Floor. But as you can see, we have a trend line here. This is the 50-day moving average. It's moving up very nicely. Very much down today, but it's still within trend. This is typically what you're looking for. You're looking for the overall trend of a stock, how it's going. Remember, you want to buy a stock that's going from the lower left-hand corner to the upper right-hand corner. And Netflix definitely meets that category. So that's I do believe it's probably going to go higher. My guess is next week you're probably going to see it move back up to maybe the 450, the 455 level on Netflix. That's kind of what I'm looking for, but depends on how strong or weak the market is. All right, so Documentum went crazy. Okay, cool. Yeah, Documentum was definitely stock. So let me look at DOCU. This is a stock that I have been watch listing, and I've shown on this program several times. I think it's a great one. But let's just say, yeah, it's $9, up $9. Yeah, this was getting ready to pop. This is definitely in the right chart pattern. So this is a stay-at-home stock. So let me kind of show you that on the screen. Thank you very much for bringing this to our attention, because I think it's obviously there's somebody that may be wanting it. Typically when you get these upward trends like this, you see how it's following this pattern. Well, this is the 40-day moving average with very nice volume there. As you can see, it follows this trend line. So this is the reason why it's potentially a really good stock. There may have been a little bit of a short squeeze here. What I mean by a short squeeze is that sometimes when stocks get going like this and they start moving up, and DocuSign is definitely in that category, people will say, well, goodness, I don't believe it's going to go up that much, so I'm gonna short the stock. And then what happens is it moves up, it still continues to move up, and they get a short squeeze. I'm not sure that's the case here, but let me take a look. They may have had earnings, so let me just quickly look at DocuSign. Thank you for bringing that up. This is one of my favorite stocks, by the way, and it's definitely on my watch list. And I've been in and out of the stock several times. DOCU. Let's pull that up. There we go. DocuSign. Okay, cool. Let's see. I don't know if it was earnings or not. Let me just. Nope, it's not an well, okay, not an earnings. Okay, well, yeah, look at that. Wow. Look at these numbers. I think everyone has to kind of look at these numbers, because they're just excellent. Earnings per share last quarter up 71%, 333% growth. Yeah, this is just great. It's in the #1 industry group too. By the way, the computer software enterprise group overtook today. It's the #1 group, and that's also another thing too. Remember, you want to try to look for stocks that have a very, very high rating. This is also #1 in this category. It just doesn't get much better than this, folks. This is really great. It's also up $2.93. I don't know what's happening, but maybe something is going to acquire this. I don't know. This is tremendous, and it's also up on heavy volume. So, just a great 99 composite. Yeah, this is the kind of thing that you always want to look for in a stock, because this is really, every once in a while you're in these, and then they just go great, and I really hate DocuSign for personal reasons. Okay, well, I understand, man. It's a COVID-19 world, man, but we're moving that way, and The other stock in this category, as a matter of fact, this is one I use. I use the Adobe Document Cloud, which is a similar, but it's a much bigger stock, of course. But it's also just a tremendous stock as well. Okay, so luckily I caught. Oh, nice, fantastic. Well, that's excellent. It's nice, isn't it exciting when you can just you get in the stock and you get a $7 a pop. That's just, I know, that's I live for those. I think those are just great. Congratulations, man. Everybody out there, Keynotes, just wanted to show, basically where he got into DocuSign. I think that's just awesome. Thanks for sharing that. I really, really appreciate it. I really love it when people share their successes because, it buoys me up and I just think it's great. And DocuSign, you did great. So, all right, I have a question here from Arnold. Hi, Jeremy. We're still in a confirmed uptrend. You know what? We still are, and I know that's hard to believe. You look at and you think, wow, are we in a confirmed uptrend? It doesn't feel like it, but guess what? We are, and let me show you that slide once again because I think it's very important to look at. This is part of the reason I always present this slide first is because this is the slide that I look at every morning, the first thing, because now the NASDAQ is down, but the market is still in a confirmed uptrend. So if this moves to a sideways motion, which it may by Monday, or a confirmed downtrend, then we'll change our trading strategy. Right now we're long, we're not short anything right now in the trading strategy, but we are in a confirmed uptrend. Believe it or not, even with today and yesterday. So it's just odd. I mean, that's how it sometimes works. Let's see. How do I invest in shit? All right. Thanks, man. Okay. Shill, a new acquisition company like Tesla. Okay. Here's the problem with acquisition companies. I mean, I know that some people made very, very good money on the acquisition company for Nikola, but this is buying a lottery ticket, and I just I'm not trying to. There are other kind of companies that are going to give you. Here's the problem. Here's what I don't like about an acquisition company. You just don't know, even if they say that they're going to invest in a company that makes electric vehicles. You just don't know until they do it. So it's just too hard. I mean, this is a kind of chart like this, I'm very, very leery of because it usually these things don't end well. Sometimes they do, but usually they don't. This one, you see, it was worth nothing here, and then all of a sudden it goes way, way up. Well, that's it's great if you do that, but this is very, very dangerous when it moves like this. So and the fact that it's an acquisition company, I also don't think that pretends well, because you just don't know what is going to be invested in when it's going to be invested. So that's the thing. You got to be really super careful. I really couldn't advise you on that one. I don't think it's really good. Oh, gee, please advise what to do about Luck and Coffee. Oh, geez. Here's the problem, and I actually covered this in a TikTok video. Luck and Coffee is a Chinese Starbucks clone. And unfortunately, because a lot of things, they don't keep their books as well as Starbucks does, and they typically frauded up. They say they lied basically, and told everybody that they had all these stores that they didn't have, and this is the problem, unfortunately, with Chinese companies. And as a matter of fact, there's a move to make it so that Chinese companies can't list in the United States unless they use generally accepted accounting principles. And there's a reason for this, because investors have no way to know if they're lying or not. They need to have audited financials. And they do sort of have audited financials, but not really. So this is the problem with BABA. This is the problem with Luck and Coffee. This is the problem with a lot of the Chinese companies. I'm not saying that they're not necessarily good, but you got to be super careful with them. Now, this is the chart of Luckin. If you're in Luckin right now, you probably have lost all your money. I mean, I don't think it's going to come back. This has got the death cross. This is what they call the death cross. This is the 50-day moving average. It crosses the 200-day moving average. Whenever that happens, get out of the stock because typically it's going to go lower. And sure enough, it did. Now, on the other hand, if you see the 50-day moving average move above the 200-day moving average, that's when you want to start buying it, because that typically will mean that it is going to move higher. So, but this is the death cross where you have the 50-day that crosses the 200-day. It's just something you want to be very, very careful about, because it typically will make the move lower. Excellent. Oh, Spotify. Okay, Arnold, thanks for bringing up Spotify. This is one that I bought. I had this figure for about 5 days. Probably should have held on to it. I did buy this IPO. I think that Spotify. Spotify's yeah. Look at that. Okay, so let's show this. Let's show the chart of Spotify. Because I think it's very, very instructive. I mean, I think you did really great here by buying this chart, Arnold. I really do, because I want to show you some of the things that I look for on a chart. Oops, there we go. Let's get that back. There we go. Spotify. All right. First of all, it's got a composite rating of 94. That's definitely the kind of stock you want to buy. Now, I know it's expensive, but that's the kind of stock you want to buy. Also, very nice pattern, going from lower left to upper right. That's very, very good. You also have strong buying action here. That's excellent too. And if you look at it, and you look at this, its industry group rank is number 4 out of 197. So those are the kind of stocks that you want to get into. Those are the kind of stocks you want to look at. They typically will do well. Buy quality stocks on highs or on highs and going higher. That's really how you do it. You look for stock that is in the right sector, moving higher, and you buy it basically at its high, going higher. Sounds like it's counterintuitive, but it truly works, and that's one of the things that you can learn in the CAN-SLIM investing method. And by the way, if you're looking for a book that kind of explains sort of what I'm talking about here, because it seems kind of like, I'm talking like cup and handle and cup and 3 days time, and it's like, what's this guy talking about? Well, William O'Neill, many years ago now in the 1980s, basically came up with a system of buying stocks, growth stocks, and it does pretty much all the professional traders that win the trading competition every year. Almost all of them use CAN-SLIM, and the book that you need to get is How to Make Money in Stocks in Good Times or Bad by William O'Neill. I think it's in the 3rd or the 4th or even the 5th edition. I don't know, but it's up there. Now, William O'Neill also started the company Investor Business Daily, and it's what I use. I also use another product that you're not seeing here, and it's called MarketSmith. It's a little bit for professional traders, but essentially, if you can get a hold of the Investor Business Daily on their website, they have a digital version that's very affordable. It's definitely worth it, because if you want to trade, you definitely want to look at stuff on the Investor Business Daily. Okay, so can you accept Autodesk? Okay, well, let me look at Autodesk. Autodesk, I like Autodesk because they're sort of a de facto standard for engineering drawings, and I think that over the years, Autodesk has definitely taken over that standard. I know that the reason I know a little bit about Autodesk is that I'm considering building some houses in the oh, look at that. Yeah, they beat the first order court. Yeah, okay, it's great. They just announced. I have not in Autodesk, but this is a quality stock. Okay, it's 91. It's down a little bit today. Now, this is a reason also why you want to be a little bit careful buying a stock through earnings. But I'm going to show you the chart on this one. Autodesk. Autodesk is a terrific company, by the way. Computer software design groups. This is a very good group. Let's look at it's an 18. Their industry group rank is 18 out of 197. So it's pretty excellent. They just looks like their earnings per share were up 89%. Yeah, this is a nice stock. Probably see it firm up. and move higher. Moved a little bit lower today. Here's the thing: when a stock, it looks like they just announced. I don't know if they just announced or not. I have to look at the earnings calendar. But this is one of the reasons why it's a little bit risky to hold a stock, even a really great stock like Autodesk, through the earnings, because you can't really predict. A lot of times, even if they have great earnings, they won't be great enough, and so this is one of the reasons why I typically like to sell my positions before earnings, and then if it's good, buy them afterwards. It's just kind of a risk mitigation strategy. You do give up a few points, but a lot of times it's really, really worth it to do that way. So, okay, so TikTok. Please advise about Luckin Coffee. If you're in Luckin Coffee, here's the thing. I don't think it's going to come back, but you're probably down so much if you're in Luckin Coffee. You might want to hold on to some of the shares, maybe sell half the shares and keep them. But I don't think it's coming back, and I think that the money that you invested in it is lost. This is why it's really, really important, and I just want to reiterate this. This is something I had to learn the hard way, and everyone seems to. And that is, if you buy a stock, always set a stop loss, good till cancel, for 93% of what you paid for it. So if you buy a stock that costs $100 a share, you want to set a stop loss, and this is a stop market at 97 or 93% or 92%, either 8 or 7% of what you paid for it. So if you paid $100 for the stock, you want to set that stop loss at $93, and you just want to put it in there and just leave it. And if you get stopped out of it, you get stopped out of it, but it saves your money. It saves you money. I had a trade on IMFI, which is a 5G stock, which I think is going to do very well. I didn't quite enter the stock price right, but I had the stop loss on it. I got stopped out of it. I wish I hadn't gotten stopped out of it, but you know what? The stock now is lower than where I bought it. So I'm glad that I got my money back. So always, when you're going into stock, no excuses. Put a stop loss in, good till cancel, at 93% of what you paid for the stock. And you may get stopped out every time too. It may get frustrating, but it's going to save you in the long run. So that's something that I always want to put out there. All right, your take on TTG stock. So let me look at TDG, and that is. Is this one of the? Okay. Oh, I don't know this one. It's interesting. Manufacturers, controls, and ignitions, gear pumps for aerospace. Okay, I don't like this. I don't like the stock, and I'll tell you why I don't like the stock. It's nothing about the stock. Though I think the stock is trending a little bit down. The chart isn't bad at all. But here's the things I don't like about this. It's got a composite rating of 92. Why buy a 92 when you can buy a 95 or a 90 or a 90? Why buy that? I mean, it just doesn't make sense. It's also a very expensive stock at 420. And another thing about it is that its industry group rank is 126, aerospace. Well, I like the aerospace business. I've worked in the aerospace business. For full disclosure, I worked at one time for Pratt & Whitney as a financial analyst in San Jose, California. But right now, the aerospace group is not doing well. The reason is because Boeing is not doing well. And so I can't recommend going into anything that's in the aerospace group, at least not right now. The only possible exception to this rule is if the Starlink constellation, this is what SpaceX is launching. If they go public, then but that's really in the communication sector. So I can't recommend this stock just because I just don't think you're going to do as well. Now, I know that may be kind of controversial. I don't like to rain on anyone's parade, believe me, because I've been wrong so many times. But I can't get behind this one based on the fact that it's in the aerospace group. And right now with Boeing, so weak. All these companies basically either they're suppliers to Boeing or they're suppliers to competitors to Boeing. With Boeing very weak, I just can't see this as being a really good deal. Okay, so let's see. Luckin Coffee. Okay. New acquisition company like this. Again, this is just a tough way to go. So let's and thanks for this very much. LRCX. Okay, let me look at LRCX real quick and see kind of what it's looking like. LRCX. Yeah, okay, great. And let me look at the chart here for LRCX. Oh, yeah. Oh, talk about a good company. Yeah, this is a good, by the way, everyone, this is Lam Research. This is a total quality company. Lam is the leader in a business that's a very interesting business. It's called CMP, Chemical Mechanical Planarization. And basically what it is this is the very, very important equipment company that make, and also in what they call the metrology business. When you're making integrated circuits, when you're making chips, you have to do CMP. And Lam is the world's leader in this. There's the other company that is sort of in this business. It actually at one time was larger, and that is Applied Materials. We are at the beginning of a semiconductor super cycle, which is very important. A lot of people aren't familiar with this, but typically there's something called Moore's Law, which you should definitely read up on, that shows this. Every about 18 months, we go through an upgrade cycle in the semiconductor business that creates a lot of demand for the products that certain equipment companies make. KLA is one of them. Lam Research is one of them. Applied Materials. These companies typically do extremely well during these upgrade cycles. We're definitely in an upgrade cycle. And so I wholeheartedly recommend taking, at least watch listing Lam Research, because it's a winner company and it's in a very, very good sector. Also want to show you some of the things. And I really appreciate you bringing up this, because these are the kind of firms that you want to be watch listing and buying. Its industry group rank is 28. That's excellent. It's the only thing is the earnings per share is due on the 31st. So I probably wouldn't be in this stock only because it's earnings. But after earnings, the day after earnings, if the earnings are good, I probably would buy this stock based on what I'm seeing here. So this is a very, very good. It's got excellent margins, 26%. It's got good growth rates, but actually the growth rate should pick up because of this semiconductor cycle. So I think that this is a winner stock, and I think that I really appreciate you bringing it up. It's definitely an area that you want to be watch listing stocks, because this is an area that you're probably going to do quite well in. So thank you so very much for that. Please advice on Luckin. Okay, that's Luckin. Let me see if I've got some other messages. Okay. Could you comment on Nikola, which dropped by 10% today? Okay. Yes, I can. This is the problem with, and this is just tough. Listen. Here's the problem with Nikola. I mean, I know that everybody, it took Tesla like 12 years to get to the point that it was going to be, viable. And Nikola just hasn't paid its dues as a stock. It's not that necessarily the company is bad, but it just hasn't paid its dues as a stock. See, as you can see, it spiked up. Then I suspect that this is going to probably stabilize. I don't necessarily think this chart doesn't look like it's gonna fall tremendously, but here's the problem with this. It's just not. I mean, the problem with everybody's trying to get into the electric car business. It's too expensive to get into the electric car business unless you're an incumbent player. So the only people now that are going to be able to get in the business, except for, of course, Tesla, are the incumbent players like Volkswagen and those type of people. So they've moved their strategy to go to the truck market, which is potentially a more profitable market. But the problem with the truck market is the trucks require lots and lots of batteries, which these companies do not have the capability of building, but Tesla does. So I think it's not necessarily a way to go. I know that's disappointing, because I don't think Nikola over the long period, because they haven't produced any vehicles. Now they may produce some test vehicles, but they don't have the ability to produce vehicles. So the minute that Tesla starts producing in volume the trucks that it already has, they're dead. I mean, they're dead. So they may be bought by a bigger company though. That's the game, is that Nikola will be acquired by somebody that's big, like Ford or Daimler or somebody like that. But even that, I think that's very risky. So I can't really recommend Nikola Stock right now. They may be able to produce trucks and they may be able to do it well, but right now, I don't see it. You're better off you're better off buying fewer shares of a better company, Tesla being the better company. Even if you're just buying fractional shares of Tesla, I think you're going to win on that. That's just my opinion, but and that's really tough because look, I didn't buy Tesla until December of last year when it went above 361. The reason I didn't buy it, it was on my watch list literally for 2 years, and the reason I didn't buy it is because it was not at a proper buy point. And so I waited and boom, there was the proper buy point came up. I got in. It went well, but it went up and down too. It was very, very volatile. And then there was a blow off top basically in late February. And because I had my stop losses set, I was able to sell out at the right time. But that's the problem, with this industry. I mean, the electric vehicle industry is probably in 10 years going to be one of the biggest industries in the world. The automotive industry is already a giant industry, but this, cars aren't going away. They're just changing their fuel sources from internal combustion to electric. Not all of them are going to do it, but a lot of them are. And Tesla is going to be the leader. And, it's just one of those things. I mean, it's just one of the things. It's time to get on board. I mean, even though you're going to have to pay way too much for Tesla, I still think it's going to go higher. And if you can only get a fractional share, go with a fractional share. The stock market sucks. What do we do? Okay, well, here's the problem with the stock market. It sucks and it's good, and it sucks and it's good. We're not in a normal market. Here's what you do in a market like this. When you buy, right now you buy quality in this market, and then you sell calls against it so that you protect your downside. In this market, you've got to be extremely careful. Review all the stocks that you have. And if you don't have stop losses set on your stocks, set them now. Set them now, because we may go down lower, and you just want to preserve your capital. If the market direction changes, and it may, then we will get into shorting stocks like we were in March. But right now, we're still long, but we're not going to see these uptrends like we're seeing. So protect your shares that you have. If you have gains in your stocks and you have more than 20% consider selling right now and locking in your gains. If you have stocks that are down more than 7%, consider selling them and then waiting for the opportune time to come back into the market. I'm not saying sell and go away. I'm saying sell and wait for the right opportunities if the stock that you have is down more than 7 or 8%. It just isn't worth. There's just too many opportunities when things turn up. The stock market probably will turn up, but it probably won't for a while. Remember, it went up about 7 or 8 of the last days before Thursday of this week. So it's been going up and up and up, and then it's going to be readjusting. So are we in a downturn? No, but we're not quite in the upturn that we were. So that's kind of the long and the short answer. Not too sure what you remember what you're talking about. Wirecard, but they declared themselves. Yeah, this happens all the time. This is part of the reason why this is Wirecard. This is a German stock, and you think, wow, you think that German have good accounting standards. They do, but in the financials, they declare bankruptcy, and this happens all the time in the stock market. You see this. You see companies like this, and you just have to. This is why you have to set your stop losses, because sometimes you can't detect that this is going to happen, and if you have a stop loss in, you're sold out, and you won't regret it. I'm just trying to say. What's a good entry point for Disney? Right now, I think Disney is short, to be honest with you. I know that's hard to believe. I mean, everybody, likes Disney. I like Disney, but I don't like their stock. I like their product. I don't like their stock. And this is the problem with so many companies. Here's the problem that Disney has, and this is why you have to be super careful buying old stocks like this. Yeah, okay. This stock just moved below the just below the below the 50-day moving average. Let me just show you this on the screen here. Because it moved below the 50-day moving average, this is not a viable chart right now. And of course, it is down, and it's in the back pause rate. You've got to wait until it moves above that 50-day moving average and it moves up. I wouldn't be in the stock, and I know this is going to be harsh, but I wouldn't buy the stock until it had exceeded about $127 in price. And the reason why is because stocks like this you want to buy on higher highs. You don't want to buy them on a downtrending chart. This is a downtrending chart. If it breaks below this 50-day moving average, and I think unfortunately it's going to go lower. Disney's not going to go out of business, but I don't think Disney's going to be even at 109. I suspect that their real price is more like about $89 to $85. $85 to $89. I just think that's really their real price, and this is based on the fact that they have the theme parks that are not going to open, and they have the cruise line which isn't going to sail, and so they got a lot of issues going on. Well, it is an hour I've spent with you, and it's really also really awesome. I love this. This is what gets my juices going, and it also helps me be a better trader. By the way, if you want to help me be a better trader, subscribe to my alerts list. It's real easy to get. It's free. You just go to DallasTradingFloor.com and just sign up for it, and I'll get out my trading list. This is just really trading ideas. Typically, this is what I'm trading currently, and it's a good way to kind of get an idea of how to trade the CanSlim method, which is what I do, and also how to trade covered calls, which I do as well. So I typically go out with this all the time. Now, if you're on TikTok and you want to sign up for the list, it's really easy. Just go to my profile and click on that link, and it'll take you right to a subscription page. So it's a VIP subscription list, and it is free. And I hope to see you on Monday. And let's see. Thanks. So the airlines are in the dumps. Yeah, I think they are. I mean, I know I love the airlines. I love flying places, but you know what? With COVID-19, I just don't see it. I just think I think the airline stocks. I think Boeing. I think the travel-related stocks. I think Marriott. I think we're getting ready, and this is probably going to happen this next week. I'm probably going to recommend some shorts on some of these stocks. Now, I haven't done it yet because we're in a confirmed uptrend and we don't have the right patterns yet. But I think we're getting to the point where we want to change up our trading strategy. Instead of going long, we want to possibly go short. But we're not there yet. And I think that the travel stocks, the travel and leisure stocks are just not where to be right now in the market. You want to be in the stay-at-home stocks. You want to be in the stay-at-home stocks. You want to be in the Zooms. You want to be in Microsoft. You want to be in stocks like that because people are working from home and they're doing a lot of things from home, and that's just a fact. I mean, you can't fight the tape. Don't fight the tape, and that will bring you great results. Everybody, stay safe. I hope to see you back here on Monday. I'm on at 2:30 Central, and so I come in. Oh, wait a minute, I have some more stuff. I worked in your building. Awesome, thank you, David. Thank you, David. By the way, I'm right here. I'm on the third floor. I'm in what they used to call Node, N-O-D, and it's at the corner of Preston Road and McCallum, right here in Dallas, Texas. And come by and see me anytime. And I love the banana. I do too, man. The banana leaf is awesome. Unfortunately, with this COVID-19 thing, you can't go over there. I love going over there for lunch. By the way, if you go over there for lunch, say hello because I'm right here, and you can come on by anytime. And I'd love to see it. And some people have already come by. We've had visitors from Houston, and it would be great. But anyways, thanks for that, and I will see you on Monday again. Stay safe and happy trading, and I'll see you then.